Kia ora, and welcome to the CoreLogic Property Market Update for November 2019. Well, let's get straight into it. The key message today is that the signs of an upturn in the housing market have become clearer in the past few weeks. True, you wouldn't yet pick it from sales volumes comparisons, but a big reason for that is that there remains a lack of listings on the market. You can't buy what's not available for sale. Anyway, there are signs of life in certain pockets of the country, and Auckland looks to have bottomed out. As we move into summer, activity should increase further, and we have noted that typical time on the market is already easing downwards in many areas. When we look at the change in property values, the uptick in the market is clearer, again impacted by the dearth of property listed on the market. The CoreLogic QV House Price Index showed that nationwide, average property values rose by 0.4% in October, with the annual growth rate increasing from 2.4% to 2.8%. Regionally, the standout performer from our main centres remains Dunedin, with values there soaring by 2.7% in October alone, and 14.7% in the past year. The hospital rebuild is clearly stimulating the local economy, which is flowing through to housing demand, while attractive rental yields are also enticing investment buyers. But this isn't just a story about Dunedin. Indeed, Auckland is showing a money lift, with values up by 0.6% since July, the strongest quarterly rise in the super city since early 2018. Within Auckland, the North Shore, which was previously the epicentre for weakness, has seen values spike 1.5% since July. Outside our largest cities, many of our provincial centres are also seeing a recent strengthening in values, although we do need to sound a word of caution for Whangarei. There, values have slipped and are now 1.4% lower than a year ago, the first time in the negatives since April 2013. So Whangarei aside, what's driving the general rebound across the country? As always, it's a mixture of things. But I think that the most important factor has been the reduced interest rates that banks are using internally to test the buyer's ability to service their mortgage in a worst case scenario. In other words, the serviceability tests. These were lowered in late August, and the flow onto the housing market has been consistent since then. Based on CoreLogic's buyer classification data, the key beneficiaries of ease serviceability testing seem to have been mortgaged investors, who have recently lifted their share of purchases back up to 26%. The highest since late 2016. I don't think there's any doubt that property, especially residential, remains the dominant investment vehicle for choice of Kiwis, especially those with retirement on their mind. And with returns on other assets like term deposits low and a renewed confidence in property, especially when compared to stocks, it's not difficult to understand the recent lift in activity. However, any investor buying on the promise of free and easy capital gains without having to do any renovations or improvements probably should proceed cautiously. It's likely the latest era of supersized capital gains has largely passed. So for the next few years, it's all about elbow grease and paying close attention to rents, yields and costs. So, to close out this month's update, I also need to touch again on the Reserve Bank. They've already got their latest official cash rate decision out of the way, which was to hold at 1%, but they're still firmly in the hot seat. Next, it's their financial stability report on 27 November, with the current chance of a loosening in the loan-to-value ratio restrictions sitting at about 60-40 in favour in my eyes. Likely, due to the restrictions not necessarily being the biggest constraint on the market, but not a sure thing due to the recent lift in investor activity probably giving cause to pause for the bank. Then, within about a week of that decision, they'll be announcing the results of their bank capital review. Whatever the final figures are, the debate on its merits and consequences will rage on for a wee while yet. For our take on all those decisions and everything else property, make sure you keep across the research and news tab at corelogic.co.nz. Next up on our reporting schedule is the Pain and Gain report for the 3 months to September. So make sure you're all signed up to our updates to get it once it's out. Mā te wā.